Why is the market down after Fed's decision to stay put? Can someone explain why stocks are going down after the Fed today decided to not increase interest rate? Isn't that supposed to be good news? Sorry. I am not well versed in these things, so I am obviously missing something. Don't just read the headliner. Devil's in the details. Plot was hawkish, with one more hike expected before the year and fewer cuts than previously indicated for next year. Powell's speech was also on the hawkish side. He said the Fed may have to keep rates higher for longer until data can show labor market cooldown. The stock market is always forward-looking. In other words, outlooks are more important than current situation. Same goes for company earnings. For example, stock will go down on good earnings if guidance for next quarter is bad. 99% of the market was convinced of no hike, and further talk of another hike in November. Everyone thinks, oh, they won't hike, and then stocks will rocket. I'll leverage into a bunch of shit for when it rockets. Fed doesn't hike. Everyone already bought what they were going to buy before the perfectly anticipated decision of the Fed not to hike. No one left to buy. Market starts taking their non-winning leveraged bets off. Market falls. First time? Because the market isn't predictable. Same reason they went up when rates got raised. No one knows shit about fuck gif emote free emotes pack grimacing. The market is not so simple as good thing market up, bad things market down. There's really no point in trying to decipher day-to-day price action. If you knew exactly what the news was 2 days in advance and tried to bet on it, you'd definitely lose because you can never predict price action. Did you miss the part where a hike is expected by end of the year? Immediate reaction. Mainly because the Fed had signaled there would be 4 rate cuts next year. Now they're forecasting there would only be 2. So tighter economic conditions for longer. Market down. Just buy cheap assets and wait. Just keep DCAing into the market. You people crack me up. Zero problem watching the Nasdaq melt up 40 in 7 months for no reason. But the second the market finally decides to take notice of the macro shit storm on the horizon, you have to ask why we are slightly correcting. Because Powell said higher for longer and removed 2 of the 4 planned rate reductions from next year. That's bad. Also, Congress just today printed $200 million more money just today with the CHIPS Act in order to increase inflation even further. With the current administration fighting so hard to increase inflation, Powell has a hard job and rates have to stay high. J. Powell have you by the balls. Higher for longer. Plot. 2 cuts maybe next year versus the 4 market had priced in. It's down and this is a good thing. So it's time to buy. The Fed. Plot had much fewer cuts much later, so the market is pricing it in. So in the book and show foundation, psychohistory can only predict large movements across vast amounts of time, but not individual people's movements from day to day. The stock market is nothing like that at all, and nobody knows why the fuck it goes up or down. Plot predicts 2 more hikes next year. Not really going down, more like staying within its lane, just like the Fed are waiting for data. Because the market is currently priced for massive rate cuts in 2024 and it is now slowly dawning on it that is almost certainly not going to happen. Easy. People thought it was gonna go up so they bought calls, so the makes it go down. Combination of sell the news and algos digesting the plot as it came out at the same time as the rate hold decision. Plots showed higher for longer with rate cut anticipation moved out to September 2024. I say this every time, but do not make the mistake of trying to predict how the market moves too. macroeconomic or geopolitical events. There are various well-known studies showing that if you are given various future macroeconomic data, you still won't be able to predict which way the market goes. This is why the best investors focus on the quality and valuation of the individual businesses they are buying rather than the Fed, interest rates, inflation, etc. Uncertainty on whether they'll add another rate hike in the next 2 meetings and no indication rate cuts will happen in 2024 is driving the market down. Should rally back up tomorrow because market makers are criminals and need to be demolished. It's good that it's down. Hopefully it'll crash to 2,900 so we poor can eventually make some money someday. Forward guidance, as market moving as the rate decision. 'Cause fuck you. That's why. Isn't that supposed to be good news? Not if the expectation was either that they'd stay the same or that they'd drop. Even. Stop looking at charts as in the moment. The stock market always looks into the future. The expectation of what happens today is priced in weeks prior. Maybe they didn't say enough about the future and now the market is pricing in rate pessimism. Could be lots of things a bunch of idiots on Reddit, me included, obviously wouldn't know about. It was already known the Fed was not raising rates. Nevertheless, if anyone claims to know why the market does what it does, stop listening to them immediately. They want good news, not vague, not we might raise it 1 bit per second next month. Just good news every time. People wanted to hear no more hikes. They said one more next year instead. It's bad for BlackRock. People like them are probably dumping shares or losing value. Fed indicated future rate hike. Because it means recession is coming. Because it's all a scam. Inflation isn't over. The Fed has given up. I guess the 10-year will be 5 soon. Not really going down, more like staying within its lane. Efficient market hypothesis. The inherent pessimism of investors not exceeding expectations is a negative. No rate hike was already priced in. Fed.plot showed less rate cuts in 2024-2025 than last time. Super fucking cringe post U6 stringfella. Simple. If it does what you expect it to do, you won't lose money. My regards. Sell the news. It doesn't matter what Fed says in any case. I mean, do we even believe what they are saying? No. Okay, motley fool maybe. They always claim to know why. The Feds want to see more evidence of inflation easing. Sees risk in consumer spending, which is being resilient, and rebound in housing. No sign mention of rate cuts and hasn't switched stance on policy. With hawkish cautious wording. Also, the Fed's forecast for interest rates in the future were higher than last meeting. Market keeps underestimating the Fed. Because buy the rumor, sell the news. They didn't raise them today, but will they do it next month? Because they are still hawkish for the next 12 months. This is a guy who wants references from an escort. Can you say unreasonable expectations? Because there is more money to be made off of options if the market goes down. Outside of the Big Seven, the market's been getting murked. Normally it's the predictions of the Fed lowering rates somewhat in the future where wrong, so people sell. It's the time essence being very far away. Price of oil has climbed and the Fed is worried about inflation means steady rates could still contract more the economy, or that they might increase later, as the Fed might be signaling they might increase rates later that way, not to spook people. Powell is more in the camp of telling people very far in advance what the Fed will be doing. And if anything in the phrasing of what he says mentions rate increases, then investors sell. Until the next news cycle, of course.